Creamer Media's Mining Weekly is speaking to Errol Smart, the CEO of Orion Minerals, a company which is active in mining development and exploration in South Africa's Northern Cape. Errol, can you tell us about the proposal that is possible to be put to the government about the flow-through scheme that has been so successful in Canada and that we were promised several years ago, but then were given other alternatives which haven't proved effective? Can you outline the benefits of this flow-through scheme and the likelihood of us getting it in South Africa?
This is something that I've been working with my colleagues at the Minerals Council, and we've been very fortunate that for the big legal tax accounting firms have thrown their weight behind helping us, because we realize government have got a problem as well with tax recovery. At the moment, the government has to get their tax earnings. Otherwise, we're just not going to keep our economy ticking over. We know that there's a big problem. But at the same time, somehow we've got to kickstart exploration. Mining is slowly but surely dwindling in South Africa because we're basically exhausting the discovered mineral resources. And unless you feed the sausage machine in mining, it all dies. And we haven't been feeding it. For the last 25 years, there haven't been virgin discoveries made because nobody's been exploring. 25 to 35 years, in fact. So we went around the world and said, listen, let's stop trying to invent a wheel. We know that the wheel's been invented around the world a couple of times. Let's go find the best wheel in the world and see if it can be adapted specifically for the South African situation. And we know we can't be a shoehorn. It can't be a cookie cutter and take exactly the Canadian system and use it in South Africa because we've got different tax laws. So we said to Faskins and ENS and Deloitte and PwC that worked on this with us, we said, listen, let's find a way. Let's apply our minds to solve Treasury and SARS's problem. They need to get tax earnings, so we can't take away their tax earnings from people that have profits and have taxable profits. But we need to somehow incentivize people to invest in the high-risk world of exploration and exploration development, because we know that exploration is a high-risk investment. It's not for everybody. It's not suitable for everybody. But if you leave it for a taxpayer that's got a profit at the moment, let's say it's a corporate taxpayer and he's got R1 million of profit. Well, he's going to pay 280,000 Rand in taxes and he's going to be left with 720,000 Rand that he goes and he reinvests. Let's say he chooses to go invest it in a blue chip share on the JSE, because that's what typically happens. They go for a low risk investment with their profits because there's no incentive to do anything else. Well, you don't create value by doing that. By going and buying a blue chip mining stock or any other stock for that matter, you don't create value because the money doesn't go to the company to actually grow anything. What flow-through shares do is it's a contract between the actual exploration company and the taxpayer and SARS. So there's actually three parties to this deal. So let's say Orion is the company. I go to SARS and I say, listen, SARS, I would like to raise $1 million from a taxpayer that we've identified that's got R1 million worth of tax profits this year. If you allow me to play shares to him, I will forego R1 million worth of tax shield in future when I come into production. So SARS says, okay, so you're giving up R1 million of tax shield in the future, so I'm going to get another 280,000 Rand earlier when you start producing profits in the future. That sounds all right, but I've got to give up 280,000 now. But now there's a time problem. What people haven't taken into account, though, is in the world of exploration, the day the explorer gets the money, he starts spending the money. And more importantly, he spends that money in remote communities, remote destinations, where we actually have to get money into in South Africa. We've got to get the rural economies going again. So let's take an opportunity. Let's take a work case example. And we actually used Orion as a work case example to go present it to DMRE and to Treasury. And we took our audited accounts over 3 years and we said, what has Orion spent? And of that expenditure every year, using the actual audited accounts and Department of Statistics tables, how much of that money actually ended up in SARS's hands within every 12-month period? And the fact of the matter is about 30% of what we spend in any year ends up in SARS's hands. Now, we're an exploration company. Remember, we're spending shareholders' investment money. We're not exploiting the minerals. We're not taking value out of the earth. We're adding value to the earth by exploring it. But we're using shareholders' funds to do that. Now, if SARS gives me this break, I can go to a taxpayer that's had a profit this year. Let's say it's a corporate taxpayer who was going to pay 280,000 rands of tax. And he says, well, if I get a break for 280,000, I'm willing to take a higher risk and I'll put my money into Orion because I might trade it off in 2 months' time and get my money back. But when he trades it off in 2 months' time, he's stuck with a capital gains tax. And Orion is still spending the R1 million that he put in, and SARS gets the 300,000 rand. So there's a three-way transaction that's actually happening here. It's between Treasury or SARS, the explorer, call it Orion, and the taxpayer. Now, if it's a corporate taxpayer, what SARS is foregoing is the corporate tax rate, 28%, 280,000 out of every R1 million. If it's a high net worth individual, yes, the marginal tax rate for a high net worth individual is 45%. Now you might have a bit of a disparity. But the reality in South Africa, and this is what the economists tell us, the reality in South Africa, that the corporate taxpayers that are seeing profits are actually companies, they're corporates, they're not individuals. So realistically, 2/3 to 3/4 of the investment is actually going to come out of corporates that are paying 28% tax. And maybe 1/4 to 1/3 is going to come out of individuals. Now, on a blended rate, that brings you back to about 30%. So SARS is going to give up 30%, and they're going to get 30% back within 12 months. There's no net loss here. But in the process, you've stimulated that whole rural economy with the GDP growth rates, the jobs that are created, and the substantive investment that happens in these rural places. And that's what works in Canada. But you know what's more important, Martin, and that's what we've lost here in South Africa, is we don't have a financial services sector that covers junior mining anymore. Junior mining shares, well, they're not listed and they don't trade. You know, we're a bit of a unicorn. I think there's only 9 junior companies on the JSE. Very few of them are in South Africa because there isn't a business in trading shares. But if you do this, you know what a huge business it is in Canada, having the thousands of listed companies, and in Australia, the thousands of companies listed on the ASX and the TSX, and the fund managers and the advisors that are trading the stock and actively trading the stock, and the research analysts that are writing research. There's a whole financial services sector that lives off the stock exchange. And it's all a stimulus package that happens. And we believe that there's a win-win situation here. If SARS breaks the chain and gives that little bit of gap, and it's only a small gap for a short period of time, they recover that money in less than 12 months, then they create so much more value in the system. And, you know, we've presented this to the DMR. I had a whole long weekend session with the DMR a couple of weeks ago, trying to work on an economic stimulus package for mining, and specifically for junior mining and exploration. And DMR realize that they have to stimulate this. It is one of the big drivers that can mean immediate investment into South Africa. You don't have to start mining the mineral to make the value. You're starting exploring and you're immediately creating value. So I think the DMR get it. They've given it a favorable hearing. They're trying to still get their heads around it, and everybody's got economists working on it and running on it and seeing if our calculations are correct. that the Minerals Council and these 4 leading tax groups that have worked with us, are our calculations correct? But we went and we presented it to Treasury, and Treasury took a very long listen to this. And I haven't dealt with Treasury before, but a lot of my colleagues in the Minerals Council have, and I'm told that the hearing was a very favorable hearing. Certainly the outcomes and the comments were favorable, and they've given us undertaking that they are going to take this away and they are going to study it, because if it is as we've estimated it, then it is something that's justifiable and should be considered. So given South Africa's position at the moment, that we just desperately need economic stimuli, this is one of those things, is we're not asking government for money. All we're asking them for is a way of unlocking money that comes from the private sector. So it's not government money that we're taking out of their pockets. It's private sector money that we're redirecting through an incentive scheme. And that's why it's a win-win-win.
And Errol, how will a junior qualify? What gives the junior qualification to be able to exercise this sort of arrangement?
So there will be specified expenditure that you have to incur. So there will be things, you know, I won't be able to go out and buy my Benzie this month on that money. But I will be able to go do drilling. I'll be able to go do assaying. I'll be able to employ people. I'll be able to run my machines. I'll be able to pay for my mineral rights applications and maintenance, those kind of things. So that's accredited expenditure. So that's what we can do. You have to be a licensed prospecting right holder. That's what we've suggested to the DMRE. I think that's what will go. So you have to have a full executed prospecting works program, a mine works program, but in terms of our NPRDA, it's a prospecting works program. You've got to have a prospecting right. You've got to have the permissions in place. You've got to act within the gambit of the law. You have to be a law-abiding citizen, a law-abiding tax citizen. And there's this contract that you go into as a law-abiding tax citizen that you will forego future tax breaks, benefits from the money that you're spending now.
Will these juniors be non-listed or will they be listed?
It can be listed or non-listed. The reality is that the listed companies will get the benefit, because you see, the investor will choose where he's going to invest his bucks. They will go do their diligence. That's why you've got all these analysts in Canada and Australia that study all the junior mining companies and put out research reports and advise investors who is a safe investment. Where's the best bang for the buck? If I'm going to invest my millions in a flow-through scheme, I want to choose the best shot at a success, because I don't want to just invest it and sell the share for the same price. Well, then I would have gained very little, because I've got a capital gains issue anyway, or you know, my money dwindles away. What I want to do is invest in somebody that I believe is going to win. So listed companies that have got visibility, that shareholders can see, that they can see that they're operating to certain quality and standard. People would want to see that. They want to see liquidity so that they could trade the stock. Very often in Canada, what you see is the money comes in the years before the listing, and as soon as the listing happens, then the people trade out. And that's when they realize their investment, and it's typically a 3 to 5 year time frame that happens. But equally, it very often happens into listed companies. And you know, that way it's an audited trail, and we will be subject to an audit trail. What we've also said to SARS is, to give you the comfort that this doesn't turn into another fiasco, is we are prepared to have the flow-through investment scheme go into an escrow account that's held by an auditor, an accredited auditor. And the accredited auditor can only allow those funds to be released to pay for specified exploration expenditure, so that we're sure that somebody doesn't use it to head off to Dubai with it. You know, we want to make sure that that money is spent in South Africa and adds value to the mineral wealth of South Africa by adding information. So that's what it is. You're buying information, essentially.
And how many times can a junior raise money in this way? If he's raised a certain amount this year, can he keep raising money? as long as the due diligence is done by the investor, the sky could be the limit.
Yeah, look, technically it can, but at the moment, there's 1.8 billion rand of exploration expenditure in South Africa. Let's say we achieve Gwede's dream of going 5 times multiple in that. And by the way, I believe in that dream. I think it can happen. I think that if the money was available, there would be that kind of expenditure. But I don't think it would be terribly much more than that. Now, 5.8 billion rand, that might sound like big numbers in South Africa, but it's a pittance on world scale. The world exploration budget is over $10 billion. Our little 5 billion rand is going to be a drop in the ocean. Yes, it's important. It's a hell of important for South Africa. It can really drive our economy, and it can keep our mining profile going so that we don't dwindle the reserve. The national reserve is dwindling. We're mining out what's available and what's known. We need to get greenfield exploration going. Otherwise, there will not be mining in the future.
And have you also discussed this with the Johannesburg Stock Exchange or other smaller exchanges? Because a lot of people are saying to the exchange now, you should also start accommodating the juniors in Joburg in the way they do in Australia and Canada and even London on the AIM.
Yes. Look, we have drawn in JSE on this, and we've looked at their Altex, and Martin, that's very affordable. You don't have to have taxable profits. I think you have to have a market cap of something ridiculously small. It's about 2 million rand market cap. So there's very low hurdle to actually become listed on the JSE now as a junior miner. But there's very little motivation to do it at the moment because there isn't the investor public. What we've got to do is create a stimulus. The fund managers and the wealth managers in South Africa, they won't take that risk. They're too scared of being sued by their investors by investing in junior mining stocks. But as soon as there's an incentive scheme that makes it a superior investment, then the money will flow, as opposed to buying paintings that hang on a wall or wine bottles that get drank. What you want to do is remobilize money that's going into, let's not call it frivolous, but maybe less important and less wealth-generating investment at the moment.
And do you think this could put us on a par with other investment destinations in mining? Would this put us on an equal footing, or is this slightly different and will have to be marketed because it's not going to be understood immediately?
I think it'll take a while, but you'll be amazed how many South African fund managers and South African high net worth individuals have got knowledge of what's happening overseas. So I think it'll be picked up pretty quickly. So I think it will get there. I think South Africa needs a lot of recovering from where it's been. When you've neglected exploration for 30, 40 years, you can't expect to get back onto an even keel immediately. There's a big backlog that's got to be filled in. And by the way, Martin, this all goes hand in hand with these other things that the industry's been speaking about. And thank goodness the DMR is now speaking about it, is getting the cadastre worked out, getting your license application time down to 6 months or less. We sat with the DMRE and the Council for Geoscience and spent 2 full days workshopping what has to be done to make a difference. Because it's all fine and well having money, but you better give people the prospecting rights and give them the access and get them the water use licenses and all the permitting that you require so that you can then go drill the holes. So all of this goes hand in hand, but I think we've got a package at the moment. We came up with, after a workshop session of 2 days working with the DMR and the Council for Geoscience, with a document that we could all support. How rare is that the industry is actually starting to agree with government or the regulator on things. Obviously, that has to now go up through the channels and all the powers that be, and DMRE have to convince the minister, and the minister has convinced the cabinet, and cabinet shoots itself in the foot every second step by putting in new taxes on chrome exports, So there's 2 steps forward and 1 step back, but I think we're seeing more steps forward than what we have for a long time. So I'm getting a real sense of excitement at the moment. I think stuff is starting to happen. And it's driven by necessity. And at least the necessity has been recognized now.
That's fantastic. And I'd just like you to recap. If I am a junior miner now, I'm looking for R1 million because I want to start drilling. What step do I have to take? And then the next step, what do I have to do? Do I have to go and find a corporate that's got R1 million to spare?
You know, typically if you were on the stock exchange, you'd have an advisor. And the advisors would have a pool of those investors. And those investors have got their advisors, and the advisors speak to each other. So you go to SARS, you get your certificate that you can go flow through shares. You then go get a subscriber that signs a contract with you that they will put in the money. You go collectively and you get the paperwork done. And these are the nitty-gritty details that we will still have to work out with SARS and Treasury, exactly how we manage this, because the other thing that we want to do is we don't want to create a new administrative burden on SARS and Treasury. They've got a limited human resource at the moment. So we have to have something that's administratively simple and a mechanism that works. And that's why we've suggested that we bring in the audit companies, the accredited audit companies and certified auditors to assist and help and manage that process and provide the escrow for that money, so that SARS has got full visibility of it, and they can hold somebody specifically accountable for what money is coming, where it's been spent, account for it at the end of the year, report it back to SARS as a tax return.
And coming back to this little explorer here who's maybe listed not in Johannesburg, maybe he's listed in Toronto, or he's listed in London or Australia. Does it matter where the jurisdiction is?
Yeah, look, I think in all fairness, we're trying to stimulate the South African economy. It would have to be a South African listing. We're not suggesting that anybody's forced to list. If they want to stay private, it's their own affair. But realistically, it just doesn't work, because the investors want a liquidity profile. They want to know, if I put in $1 million, when am I going to be able to get it out? When can I sell my shares? How can I sell my shares? Some will be happy to stay in a private company, but the majority will want to know that if my house burns down tomorrow, I need to sell my shares because I need to pay for repairs. So they want liquidity, and that's where the stock exchange plays a very important role. And the JSE are lined up to do this. They're very prepared to do this. We've had a lot of discussion with them, and we've started speaking to fund management businesses. We've actually spoken to Canadian fund management businesses that are actually preparing to come to South Africa and bring foreign money, because we've also got a side-by-side arrangement for foreign investors to bring their money to South Africa. Because you see, it's not just about mobilizing South African money, because that's just shifting the deck chairs on the Titanic. What we want to do is we want to stimulate foreign investors to say, listen, you've got money to invest. Instead of investing in Botswana, come put it into South Africa and we'll give you a tax break. And what we're suggesting is you get a tax certificate. And there was a tax credit scheme that used to be tradable in the past. So we're saying, listen, if a foreigner wants to come in and put in $10 million into South Africa, give him a $10 million tax break that he can go sell to some other South African taxpayer to get the credit. And then he gets his money back that way. So there's another way of stimulating foreign direct investment. So all of these things is a whole lot of interconnected things, but it all comes about creating a whole new financial services sector, principally around the JSE and the Altex and other exchanges, the small exchanges that have got low costs that are manageable for the junior miners. And we get the junior miners going, because there's dozens and dozens of junior miners or explorers sitting on prospecting rights. They just cannot get money to explore them. So therefore, it's a wasted opportunity.
That was Creamer Media's Mining Weekly Online, speaking to Errol Smart, the CEO of Orion Minerals.